Hello and welcome to my YouTube channel. My name is Senzo Forex Mentor. In today's video is about an order block. Okay, let's start here. What is an order block? Okay, I don't want to confuse you. You don't have to confuse yourself because trading should not be so difficult. Always it should not be so difficult. Okay, the order block in an uptrend is the last bullish candle before the market changes the direction to the downside. On a uptrend, it's a last bullish candle before the market moved to the downside. On a downtrend, it's a last bearish candle before the market move up. I'm going to show you on the chart. When I'm talking about an order block, okay, let me change this to the 4-hour time frame. Talking about the order block, I'm talking about this. You see on this area, see the market went up. This last green candle, we call it a bearish order block. This last green candle, we call it a bearish order block. Not all the green candle before down move are bearish order block. I'm saying this one is an order block because this candle, after this candle, look at after what happened before that, after that candle has been formed. I call this candle an order block, a bearish order block, because of what happened after this candle has been formed. You can see how the market has moved to the downside. The market has speedily moved to the downside, or impulsively moved to the downside, which means this move, remember the retail traders, they can't make the move like this. Only the big banks can create this type of move. So as this move has happened, it shows us, or it signalized to us that there was banks, or there was institution involved for this huge move to the downside. So the last candle, the last bullish candle, we call it an order block, bearish order block. Okay, what happened? You can see what the market did. The market came back to the same candle, to the 50% of this candle. Let me put a trend line here. It came back to the 50% of this candle, and what it did, came back to the 50% and pushed all the way down. So this is the bearish order block. Bearish order block, the last buy candle before the huge down move. Not a small candle down move, but a huge. You can see how huge the candle is going to the downside. That means this is the bearish order block, because after this candle, the market has speedily moved to the downside. You can see the long candle. The candles are very long, which are going to the downside. So the only person that can push the market like this is the institution. So we know in this move there is an institution behind this move, or this move was formed by the institution. So what we know that this last candle was the candle that they created just to give hope on the retail traders that the market is going to continue to go up. So they open their orders. Here they open their orders on this bullish candle. So as they push the market so fast to the downside, they have to come and mitigate. They have to come and mitigate on these candles, either the 50% of this candle or the opening of this candle. So see what they did. They came back and mitigate on this candle. They came back and mitigate and push the market back down. So that was the bearish order block. Now I will show you the bullish order block. See what happened after they pushed the market to the downside. See what they did here. This is also the bullish order block, because you can see the move after this last bearish candle. You can see the move, because what matter here is the move after that order block has been formed. It's the move. Remember that. What really matter here is the move after the candle or after that order block has been formed. You can see here this this is the last bearish candle before this up move. Why I'm taking this one? Because this after this candle has been formed, you can see how the market speed moved up with a speed. That's the secret behind the order block. That's why now people are searching all over the charts for order block, while the order block we only considered the last bearish or the last bullish candle after the fast or after the speed move to that opposite direction. So here we can also mark this candle as a bullish order block, because as they created this candle, they have their orders which need to be mitigated on this area. You can see what they did. They pushed the market higher, they mitigate this order block, and then they came back down, they mitigate this one, they went up again, and they went up, and then they pushed the market down as they wanted to push the market down. See, the market went down. So that's all about a bullish order block and a bearish order block. Remember that in order for you to find the order block that the market will react into, you have to find the order block that has been followed by the huge move to the opposite direction. Make sure you remember that it has to be the huge move. It has to be the huge move happen after that order block. That is how you will spot the order block. So after you watch this video, please open the chart and look for the huge move that has happened on the chart and mark that's it's all that's gonna be the bullish order block or the bearish order block. Mark that order block and see how the price reacting to it. So and the other thing is the order block we also we also define it as a strong order block when there is an imbalance when there is an imbalance left behind. So as you can see in this area, there were lots of selling, no buying at all. Remember, the imbalance comes in when there is only when the market is only moving one side or only moving in one direction. You can see the market in this move was only moving in one direction. No buying, only selling was here. So the market has to balance that area or has to fill that gap So this order block has got an imbalance, which means the market has to come back to this area because it has to come fill the imbalance, and they have to come and mitigate their orders. So I hope you learned something today about an order block. If you have any question, you can comment on the comment section. I'll answer all your questions. Okay, let's try and summarize this in case you didn't get me right. An order block is formed when the market has moved whether to the upside or to the downside. That last candle is formed, and after that last candle, and you see the big move which move to the opposite direction, we call it candle and order block. Like in this example, you can see the market moved all the way up, and then what happened after that? Market just dropped with a very high speed. See, you need to trace the first thing when you're looking for order block on a chart. You have to trace all these big move that happens like this, like in one direction. See, this one is sweet and nice because there were no bullish candle here. The market was moving very fast to the downside. So as the market was moving very fast, we know that they left their orders open here. They left their buy orders open. They will have to come back and mitigate that order. So that's all about an order block today. The next video will be about an imbalance, where I will be teaching you about what is an imbalance, how to find an area where there is an imbalance. I hope you understand about order block. Thank you so much. Have a lovely day. See you next time.